I'm just talking to myself. Does that make sense? It probably does. Hey everybody, Paul Moore here from Bigger Pockets and Wellings Capital. Hold on, don't mean to make you dizzy, but I want to make sure that we are coming across here. Hopefully you can see me. I am broadcasting live to you from our world headquarters here in Lynchburg, Virginia. And I am waiting to see if you can see or hear me. So until someone responds, I am going to continue to wait for Zach here. So today we're going to do a question and answer. It's going to be a question and answer. We're going to talk about the COVID virus. And now I see I am live with that crazy green line again. And I am trying to get started here. Okay, so this is Paul Moore with Bigger Pockets and Wellings Capital, and I want to thank you for joining us today. We're going to be talking about the market hysteria and the COVID virus and all the crazy stuff that's happening out there right now. I am so sorry about the camera situation here. I will have to, I am trying to use a brand new camera and it is causing some problems here. So I apologize, but hopefully now you are able to see me. Again, I'm Paul Moore with Bigger Pockets and Wellings Capital, and today we're going to do a live Q&A about the current market madness we are experiencing out there. The stock market has been on a roller coaster that most of us have never seen in our lifetime before. And so with all of the craziness out there, with all of the madness going on, the question is, what are we to do as real estate investors? Real estate investors have traditionally, a lot of us are a mix between stocks, bonds, ETFs, mutual funds, and real estate, but a lot of real estate investors are strictly involved in real estate. I know that, frankly, I got out of the stock market many years ago, and I really don't have a great desire to get back. My experiences in the stock market have not been positive, and so I find myself really wanting to stay in real estate almost 100%. Matt Ricciardella, who joined us last week from Crystal View Capital on this show, he said that he puts over 90 or 95% of his money in real estate. In fact, he invests, like I do, in recession-resistant real estate like self-storage, mobile home parks, etc. Our own Brandon Turner invests largely in mobile home parks. He's been around the block with all types of asset classes, single family, flips, small multifamily, medium-sized multifamily, and Brandon has also gone to the recession-resistant world of mobile home parks, and he's interested in self-storage. Bigger Pockets is publishing a book on self-storage, and it's coming out this spring or summer, and it was written by yours truly, Paul Moore, and I'm really excited to get that out on the market. So thank you, Bigger Pockets. If you love Bigger Pockets like I do, please give a thumbs up, a like, or share, because we want to get this information out to a lot more people. There's a lot of madness out there right now, a lot of fear, a lot of dread, a lot of anxiety. I can safely say that since in my lifetime, which is 56 years, I have never seen anything like this. And I have to wonder, what is really behind this? But that's not the purpose of this show. The purpose of this show is to answer your questions on real estate investing. Before we do, I want to remind you that Warren Buffett, said when everybody is acting like a bull, it's time for him to act like a bear. And when everybody's acting like a bear, it's time for him to be a bull. Warren Buffett bought, not sold, bought all types of financial stocks in the 2008 meltdown. He bought a 50% share in Berkadia Mortgage, and that's a company that I use for large-scale commercial mortgages. He bought a large holding in Wells Fargo. He bought US Bancorp. He bought all kinds of financial stocks right in the middle of the meltdown. And so what did Warren Buffett buy this week? Well, he bought Delta Airlines. Now, Delta Airlines is performing pretty well, but obviously, like a lot of other airlines, hotels, etc., it's experiencing a temporary downturn with all the craziness going on right now. And so the question is are we smarter than Warren Buffett? Are we more knowledgeable than the smartest, or at least the most successful investor on the planet? Probably not. We should probably learn something from Warren Buffett, who again said, be a bull when others are acting like a bear, and buy when other people are fearful. And you know, there's all kinds of investors out there who are selling right now, and that's obvious by the fact that the market has dropped back, at least as of this morning, back to December 2018 levels. That's erasing a lot of gains, and hopefully you all didn't experience that. I want to recommend a book before I go on, and of course I recommend all of Brandon Turner's books, Amanda Hahn's new book on tax savings, Brian Burke's upcoming Bigger Pockets book on due diligence. But I want to recommend another book today. It's Howard Marks. Howard Marks is Oak Tree Investments, one of the most, if not the most successful hedge fund in the world. One of the top 2 or 3 for sure. And Howard wrote a book called Mastering the Market Cycle. Mastering the Market Cycle, Getting the Odds in Your Favor. Now, Howard Marks says that the time to be afraid to buy is when the market is near its top. And I've been warning Bigger Pockets readers about the fact that the market is near its top in a lot of asset classes over the last several years. But the thing I want you to take away from Howard Marks' advice is this: the time to buy is when you can catch a falling knife. Now, nobody wants to catch a falling knife because it's terrifying. I mean, it's fun in theory to think about it, but it's terrifying to actually do it. And that's why Howard Marks calls it catching a falling knife. Catching a falling knife means that you are buying not when the knife hits the floor. Okay? Anybody can pick up a knife off the floor without much fear. You wouldn't want your toddler to do it, but any adult should be able to pick up a knife off the floor without much fear. But when the knife is falling, you could get really good at it with steel gloves and learn to catch the handle on the way down. But it takes a lot of courage to catch it with your bare hand. And Howard Marks says that's what the greatest investors do. They catch a falling knife on the way down. Well, my friends, I don't think real estate is in that situation right now. Real estate is not on the way down. Real estate always lags the stock market, the bond market, ETFs, all kinds of things that are constantly going up and down daily and hourly and minute by minute. And that's one of the things we love about real estate. Warren Buffett said, if you buy a company, think about holding it forever. Or think about, what would you do if you were buying this company and the stock market shut down the next morning for the next 10 years? Would you want to own that company? It's the same with real estate. Most of us real estate investors buy for the long term. And that's one of the things we love about it, is because it's sort of Buffett-esque in the way we buy, because we buy real estate to hold for the long term. We buy real estate because we believe in buying real assets that are going to hold or gain in value over many years and sometimes many decades. Now, we invest, our company, Wellings Capital, invests with a group out of Southern California that has assets they've held since 1981. That's right. They've got a self-storage facility in Livonia, Michigan that they've owned since 1981, and they have other assets that they've owned for years. And so this is the kind, I'm not saying we should always do that, not at all, but I am saying real estate investing is investing in assets that have a long time horizon and and having an attitude of holding something for a long time, which is Warren Buffett's preferred holding time, which is forever. Now, Berkshire Hathaway, the most successful investment firm in history, has assets they have held for a very long time. I mean, Warren Buffett regrets selling American Express. He bought it during the olive oil scandal of, was it 1966, I think? And then he sold those stocks, but then he bought it again, I believe it was 20 years ago in the late 90s, and he's held it ever since. And I'm almost certain that he'll be holding American Express after he dies. I don't know if that makes sense, but Berkshire surely will be holding it after he dies. And by the way, Warren says the company will be better after he's gone than now, and that's hard to imagine. So, I want to take some time to tell you, if you're a real estate investor, take a deep breath, smile. I'm not making light of the coronavirus or the stock market drop. Bigger Pockets would never do that. We're not making light of any of that, but we are saying right now is a great time to be a real estate investor. Right now is a great time to take a deep breath. If you're in commercial real estate, right now is a great time to call up some of those mom and pop operators that said no to your offer last year and say, hey, are you sure you don't want to sell? Because it would be a great time to acquire assets. And when I talk about mom and pop operators, I'm talking about, for example, in self-storage, about 76% of all self-storage facilities, there's almost 54,000 in the US. That's the same as Subway, McDonald's, and Starbucks combined. Almost about 76% of those are owned and operated by mom and pop, independent operators. I was wrong about that. But about half of the total number are mom and pop operators, which means they own one or two facilities, maybe three at most, and they don't have the knowledge or the resources, the time, or even care to maximize the profitability. So self-storage is a great place to get mom and pop operators. Let's look at mobile home parks. Now, Brandon Turner, our own Brandon Turner, owns and is buying as many mobile home parks as he can get. I bet if we could get Brandon on here right now, he would tell you the same thing I will, that he's not slowing down. He's buying as many as he can. And we here at Bigger Pockets love what Brandon's doing, and I'm doing the same thing. I'm trying to get my hands on as many mobile home parks as possible. 44,000 mobile home parks in the US. We believe almost 40,000 are owned by independent operators. That's mom and pops and operators who don't know how or don't care or don't have the resources to maximize their value. Case in point, on February 21st, we closed on a mobile home park in Kentucky for $7.1 million. And 6 days later, we were 2 days into this stock market downturn, okay? So 6 days later, it was February 27th, and we were 2 days into this crazy meltdown. I think it was the third day of the meltdown. We got an unsolicited offer. Remember, it was $7.1 million. Our operating partner got an unsolicited offer for $9 million. And we didn't even counter. The reason we didn't counter is, first of all, we weren't afraid of the stock market downturn, and neither was the buyer. But we knew it should be worth $12 to $14 million with three basic changes we were going to make, and we are going to make to this mobile home park. So it's been 2 weeks and 2 days since then, and we have not had one second thought about, with all this chaos and all this madness, we have not had 1 second thought about turning down that offer, which would have been a phenomenal $1.9 million profit in just a few weeks with no effort. But at any rate, oh, by the way, here's something cool. We bought this for cash. Our operating partner and us bought it for cash, and we went and got a loan from Berkshire Hathaway's company, Berkadia, and got that loan locked in at, get this rate, 2.99%. That's an amazing rate on a commercial loan. 2 years interest only, 10-year loan. Amazing. And so it's a great time to buy right now, okay? And with the rates being as low as they are, we had done the underwriting on that at 4.5%, but we got it at 2.99. I'm pinching myself thinking about it, and I'm really, really happy that we did it. So it's a great time to acquire mom and pop owned self-storage, mobile home parks, apartments, if you can find those, senior living. I wouldn't say it's a great time to buy everything, because I think there's a longer term, what we call a secular trend of downturn in some other areas. And so if anybody asks me, I can speak to that. So what I'm going to do now is we're 17 minutes into the hour, and I'm going to take the rest of this hour to do Q&A with you. So if you are in YouTube and you've got a question, it would be very helpful to me if you would kindly repeat your question. And by the way, Colette, that was called Berkadia Mortgage. That's Berkadia, Berkadia Mortgage. Okay? Colette, you are reading Matt Fairclough's book right now, which is awesome. Shout out to Matt Fairclough, one of my favorite Bigger Pockets authors and contributors. If you haven't read it, he's got a book called Raising Private Capital for your real estate deals, and I highly recommend that you go out right now and get Matt Fairclough's book. And so if you have a question and you've already typed it in, it would be so helpful to me if you would go up there and hit Control-C or Command-C, copy and paste it down, because I've got, as you all can see, about 50 or 60 comments here, and it'll be hard to get to all the questions if I don't do it that way. So Adoram Shemesh, thank you for joining us, Adoram. Sorry if I said it wrong. What's the unique upside of mobile home parks? Okay, so I'm just going to give you the math on this one. $7.1 million purchase price. It's got 50 vacant spots. By filling up to 1 slot a month, okay, that's actually up to 12 slots per year. We think that's the most we can do, by the way, with mobile homes. We can dramatically increase the net operating income, okay? Second, by raising rents up to market levels, which would be raising rents maybe $50 a pad, we think we can, well, we know we can dramatically increase the income at this park. But the third one, and the big one, is this. Now check this out. By passing back the water and sewer to the tenants, okay, we can increase the net operating income at this park about $200,000, okay? So let's do the math. Raising rent, it's a 300 unit park, by the way. It's over 300 units. So if we raise the rent by $50 a month times 250 units, somebody do the math on that, okay? I think that is $12,500 a month, and I think that's about $150,000 a year for a round number, okay? $150,000, think about that. Now by passing the utilities back, that's $220,000 a year, but I'm gonna round that to $200,000, that's $350,000. And by filling one additional lot site with a mobile home per month, I'm not even gonna count that, okay? So let's just say it's $350,000 increased rent. Now I need somebody to do the math on this because I have no calculator within reach. $350,000 in increased net operating income. I need somebody to divide that by 6%. 350,000 divided by 0.06. Now why am I doing this? So Adoram, the reason I'm doing this is the value of commercial real estate, the value is the net operating income divided, I'm imagining like, you guys are like, I'm, printing this out in the sky. Net operating income divided by cap rate. So the value is the net operating income divided by the rate of return, okay, or the cap rate. And I'm going to call that cap rate 6%. Now the cap rate is the rate of return that you can expect for that type of asset at that time, in that location, in that condition, okay? So we're going to call it 6%. I could argue 5.5%, and I could also argue 6.5%, but let's go with 6%. Has anyone done the math for me yet? $350,000, which is the annual increase in income, divided by 0.06, okay? 350,000 divided by 0.06. When you get that, tell me. I still don't think I'm getting the right numbers, guys. Is it 5833? 350,000 by 0.06? I think that maybe it's 5.8 million increase. That sounds about right. Okay, so Luis, thank you so much for telling me that. Adoram says 21,000. I'm not sure what that, I'm not sure if I'm saying this right. But anyway, 350,000. All right, 5.8 million. Thank you, Harris Jones. Okay, so Luis had it right as well. So 5.8 million. So if I paid 7.1 million for this park, and I just increased the value by 5.8 million, yeah, I said that right. That takes the value up to 12.9 million, okay? 12.9 million minus 7.1 million, that's obviously 5.8 million. That's the increase in value. But if I only had 3 million in equity in this, that 3 million equity just went up by 5.8 million. In other words, it almost tripled the value of the equity. And that's in a couple years from 3 straightforward changes, okay? I only used 2 of them in my math, okay? Now running the park better, managing it better, getting better internet site, getting better signage, all kinds of other things. We can rent carports. We can rent decks and steps and sheds to the residents at very low prices that they would think are a bargain, and increase that number even more. Very powerful. So Adoram, I'm so sorry I don't know how to pronounce your name, but you asked me if it was a reasonable thing for a beginner to do. Yeah, there are 7 different ways to invest as a beginner. And one of them is to join a syndicator or a fund and invest with them. Brandon Turner has a new fund out. My fund is out there. There's all kinds of other funds you can invest in. But if you want to do it yourself as a beginner, I think it's a great place to start. If you want to get more information on how to invest in mobile home parks, you can check out Brandon Turner's new fund. You can check out an ebook that I have on mobile home park investing. You can check out Mobile Home U. I think it's mobilehomeuniversity.com. It's Frank and Dave. They have a mobile home park education program that I went through, and that almost everybody I know in the business went through. Adoram, thank you. Okay, so somebody says, that's amazing increased rent, but I feel bad for the tenants, especially for the retired seniors. Okay, so I want to be clear on this. We don't invest in anything where they're gouging the residents. We're talking about, this is a park where the owner was 3 states away. They were in Georgia, and they would have to go from Georgia to Tennessee to northern Kentucky to get to this park. They hadn't been there in 5 years. Can you imagine a park with 300 spots where the owner hadn't visited in 5 years? That's the situation. The rents are way below market. So if the normal market rent was $350, maybe, I'm just saying for example, maybe the lot rent here is $270 and they're raising it 50 up to $320, it's still below market, okay? But I understand how you feel. Somebody said, Obina, hey Obina, am I saying your name wrong too? Obina OG, how can I invest $200,000? I have, like I said, I have 7 different ways you can invest in commercial real estate, and that's in my upcoming book on self-storage. And so Hopefully you'll get a chance to get that book, but some of the ways real quick are invest passively with a sponsor or syndicator. Number 2, take 20 or 30,000 of that and go join a mentoring and coaching program. Number 3, join together with some friends, put together, let's say, $1 million, and then go buy a $3 or $4 million asset. Number 4, just take that money and get a loan for the other $700,000 and buy a $900,000 asset. Number 5, be a deal finder. Find a deal and take it to a sponsorship group. That would be an owner operator, and say, hey, I got $200,000, I got a deal, but I need your help, and partner with them. And there are a couple other ways, but that's how I would invest $200,000. I hope that helps. Somebody says, any value in cannabis stocks? So here's what I think about, thanks Tim Strawbridge. Here's what I would say about cannabis stocks. There's a difference, my friends, between investing and speculating. Speculating is when there's really not an underlying, predictable, stable income stream, and basically you are investing in the value, the speculative value of the stock, which is like Bitcoin. I'm not knocking Bitcoin. Some of my best friends made millions of dollars in Bitcoin, but I wouldn't do it. I mean, it's speculation. If you want to speculate, go ahead, but I wouldn't do it. I would invest in an asset that has a predictable value over time and can be, it's a stabilized asset that can produce wealth, okay? And so would I invest in cannabis? Absolutely not. And again, I think it's partially because it is not that predictable, it's not that stable, etc. So Fearless Millionaire says, who helped you set up your fund? There are a lot of great attorneys out there, and if you want to reach out to me at my Bigger Pockets profile, again, I'm Paul Moore with Wellings Capital. You can reach out and we can give you some recommendations. There are some great attorneys. Some of them hang around Bigger Pockets. Some of them hang around with the real estate guys who are on the Bigger Pockets podcast this summer, and I'd highly recommend that you consider that. Okay, so Eric X says, I have a mobile home park for sale for $40,000. So somebody earlier asked Adoram, you might want to check in with him. Robert Hitzig says, made $80,000 shorting the market. I knew somebody would do this. I knew somebody would be able to short the market and make money, and I'm happy for you. I'm looking to jump into real estate by house hacking. I'm thinking of waiting a few months until real estate takes some price hits and there's some more opportunity. What do you think of timing? My esteemed colleague, Benjamin Colley, is here. You just saw him walk by right when I said that. And Ben, what do you think of that? Do you think that, what do you think of his timing opportunity about that? Do you think there's going to be an opportunity in house hacking?
In house hacking?
Yeah. Do you think that the prices are going to get better anytime soon? I don't actually, but I'd love to hear your opinion. You stay in touch with this kind of stuff.
Yeah. I don't think there's going to be any change for the next couple months. I think there might be a trickle-down effect that takes some time to actually hit single-family homes and small multifamilies. I don't think that the market's going to shift immediately. So we got to keep an eye on things and keep an eye on interest rates and keep an eye on what the Fed is doing. But I wouldn't wait for a perfect deal either.
Right.
I would say if you have something that you're looking at that looks good now, I mean, take advantage of a great interest rate.
All right. So Jalen Chambers says, hey, looking to buy my first property if the market was to crash. Would this hold me off to apply for an FHA loan applying April 1st? I think the FHA, what I heard was that they actually just expanded their lending. And the president has asked the SBA and other agencies to actually expand their lending. So I would look and think that that would be absolutely fine. Alvaro says, what happened? Daniel Martin says, who has a park for $40,000? Eric X does. Adrian says, is this a good time to buy the dip for my Roth IRA? Adrian, what do you want to buy? And thank you for joining the show, by the way. Aaron Henry says, as a recent graduate, would you recommend saving 70% of my income for real estate investing and pay minimum on student loans, or pay off the student loans in 2 years while slowly saving for real estate investment? Ben, I think you would agree with me, right? It would probably be better to pay off the loans slowly, right? I mean, Dave Ramsey would disagree, but I would pay down low interest debt slowly and save for real estate, right?
Yeah, it depends on the interest rate of your student loans. If it's below 4%, below 3.5%, then it would make a lot of sense to pay them off a little more slowly, especially if you have opportunities to invest the money where you can safely make more than 3.5% to 4%. I would not go investing in Bitcoin, or some other cryptocurrencies that are out there right now.
Right.
But I think it makes sense to pay it off and keep your investing rate as high as possible.
So his interest rate is 4.53%.
For student
And
loans.
I would be a little more aggressive than Ben, and I would say I would absolutely pay it down as slow as you can and save as much and invest as much as you can. But, and I don't mean just in a bank account with normal interest rates, I mean get that money to work for you investing. Trump said no interest on student loans for now. Okay, I didn't hear that. So, Marquise, hey Marquise, is it a good time to buy property? Well, it's probably about the same as it was a month ago. The only thing I would say is this: I am in close contact with a real estate team here in Central Virginia, and they've had a few people cancel coming to look at property in the last week because of fear of the unknown. And so perhaps that fear of the unknown, even though we like to believe that it shouldn't really affect real estate, like Ben said earlier, the trickle-down effect could mean an opportunity for you to purchase later if someone is fearful. And like I said at the beginning of the show, when others are fearful, that's the time to buy. Okay? That's what I believe. Now, what would hold you back from investing in cryptocurrency? Well, true wealth, in my definition, true wealth is when you have an asset that produces income. I could stop my answer right there, but let me just flesh it out a little. If true wealth is truly an asset that produces income, cryptocurrency is not that. It's speculative in nature. Do I think that's evil? No, not at all. Some of the richest people in the world speculated and won. But I will say that that is the vast minority. A book I read in my MBA program said 93% of people who play the market, in other words, speculate, lose. And my experience is that 100% of the people I know who play stocks, foreign exchange, other types of shorting and longing the market, somebody obviously succeeded here today, but in general, 100% of them have lost money and got out of it. Except I have one friend who didn't get out, but he just lost like $32,000, he told me. And so I don't really think that cryptocurrency is any different from that. Oh, Marquise, you're from Virginia. Awesome. Louise says in something, I purchased a condo when the market crashed, which generates cash flow today. Do I pay off that condo loan faster, 4.25%, 26 years, with cash flow, or do I save it for the next purchase? You purchased it in 2008. I would keep paying off as fast as you can, and then consider refinancing it when you find the next deal, like maybe getting an equity line on that. So you're paying it down, but you're also getting an equity line to get cash. Now, if you have any doubt, now again, I go back to Howard Marks. He says the credit cycle is actually, the credit cycle actually goes with the other cycles, meaning that you might have a hard time getting a loan when you want to. Okay? So if you have any doubt about that, conserve cash, because again, I don't want to sound like hypey here, but if there's a lot of trickle-down fear here and people start selling things mindlessly, you might be able to get deals at the bank. And so I hope that helps. Krishna, hey Krishna, welcome from India. I am from India and home loan interest rates are still 9% here. How to get started? Krishna, do you have any mobility and any opportunity to invest in the U.S.? Because honestly, I'm not saying that's the best thing to do. I am saying that is where you can find, that's where I know more about these type of things. So I really don't have an answer for what you should do in India. I mean, I would probably say you should consider doing some of the same things I would say to people here, which would be house hack or get an Airbnb arbitrage or do something to get started. Lease option sandwiches, again in the US. Wholesale a lease option. Do you guys know about wholesaling lease options? It's something you should consider Googling. My friend and Bigger Pockets writer Joe McCall has a great book out on wholesaling lease options. If you haven't got it, you can get it for free. Joe McCall. President Trump just declared a national emergency. Thank you, C-Tech. I had heard that was happening today. Would you recommend leaving your money in the bank during the crisis? Well, Edgar, thanks for joining. I don't recommend investing. I don't recommend putting money in a bank as an investment strategy, but as far as leaving in there to prepare to acquire something, absolutely. And Ben can jump in anytime he wants and add to this. Ben studies a lot of this stuff as much or more than I do. Deandre Lee, hey Deandre, would it be smart to buy stocks right now since everyone's in a panic? Well, the problem is Warren Buffett, Howard Marks, and Ray Dalio, three of the top investors in anyone's memory in history, are all alive right now, and they all say they don't know how to time the market. So if you want to do it for market timing, I wouldn't do that. If you want to do it from the sense that you found a stock that's probably undervalued today, I would absolutely consider it. What did Warren Buffett do this week? So Warren Buffett's been sitting on $128 billion in cash. Did you know that 10 months ago at his own meeting in his own hometown of Omaha, he was criticized by people coming up to the mic who said, "What are you doing? How can you possibly make a return for us investors with $128 billion in cash sitting in the bank?" I think it was 110 or 20 billion at the time. And Warren didn't seem ruffled. He didn't seem upset. He didn't get defensive. But Warren is probably smiling right now because he just made a very large purchase, if you didn't hear, in Delta Airlines. So Warren invests in companies, not stocks. I know. He buys stocks, but he's investing as if it's a company. He's buying it as if he's going to hold it for potentially decades. He says he doesn't buy, again, I think I mentioned this earlier, he buys as if, what if the stock market completely shut down for the next 10 years? Would I want to own this company? Okay? And so that's what I would say about that. So C-Tech, who told me that there's a national emergency, thank you so much, says if $600,000 in IRAs are being professionally managed by Wilshire, would you keep it in managed funds? I'm going to think about that for a minute, and I'm going to see if my colleague Benjamin would like to join in on answering that. If $600,000 managed by Wilshire, would I keep it in managed funds?
Yeah, it depends. I don't know. What is it in? Is it in, like, what's your allocation of stocks to bonds? How aggressive is it? Honestly, when people lose in these types of market environments is when they typically start moving money around. Usually people win when they find something really good to invest in that they understand and that they can know over the long run it's going to go up. For example, the S&P 500 always goes up. it's always gone up ever since it started.
Mm-hmm.
There's been major downtimes, and there's been, but in the long run, investors have won. And that's why Warren Buffett said that when he dies, in his will it says he's instructing his heirs to put his fortune into an S&P 500 index fund. So he's basically saying, don't do what I do as I say.
That's pretty
because I think Warren Buffett is one of those kind of like a once in a lifetime talent type investors. Not many of us are there.
Well, so thank you, Ben. I would agree with Ben. I would say that if you haven't been crushed by this, you could consider putting your IRA into a self-directed IRA, and you can do that through our Bigger Pockets resource, Dmitry Fomachenko. You can find him yourself, Dmitry Fomachenko, and get a self-directed Roth or SEP IRA, and you could direct that yourself if you didn't want it managed by Wilshire. So that's a little bit different than Ben answered, but that's what I would say. So thank you, Zach Gwynn, for answering a few questions here. Krista Clay, thank you, Krista, for joining us. First-time investor, what type of property would you suggest to invest in, and how can I obtain financing without getting killed on interest rates? No history, personal credit is excellent. So I'm going to answer your question, Krista, but I'm going to answer several others that I haven't had time to yet. I'm going to answer this question, which is kind of a generic summary of several. What would I do if I was a newbie? What would I do if I had a little bit of money, no experience, but I love real estate? What I would do is consider corporate Airbnb arbitrage or corporate landlord arbitrage. Now, somebody asked me about that much earlier while I was rambling about Warren Buffett and trying to get my camera right, and I didn't get to that. So here's what I would say. You can actually rent an apartment, and that could be renting a home, half of a duplex, an apartment in a brand new building or an old building. You can decorate it beautifully, get it professionally photographed, and then go put it on a corporate landlord program. By the way, you have to get permission of the owner of the apartment or the property manager to do this, but you put it on a corporate. There's actually an apartment building in Atlanta where this is all, the whole apartments for this. You can rent apartments and put them on corporate landlord leases or Airbnb, okay? And so what you do is you go get a corporate tenant for 3, 4, 6, 8 months, and then you plug Airbnb in the gaps, okay? So that is what I would consider doing. The second thing I would consider doing is wholesaling lease options. And without going into timing on that, basically you get a lease option under contract, and then you wholesale it to somebody else, and their down payment is your profit. If you can do one a month and collect a $5,000 down payment, and then you flip the lease option, you make it assignable, of course, and you flip it to the other person, you're helping the seller, you're helping the buyer, and you're profiting, let's just say, $3,000, $4,000, $5,000, $6,000, $7,000 per deal. If you can do one per month, many of you can quit your day job. Okay? So a third strategy would be lease option sandwich. It's very similar to what I just said, but you don't flip it, you stay in the middle. That's why it's a sandwich. If you want more information about lease option sandwiches, go to Bigger Pockets' own Chris Prefontaine. By the way, I mentioned earlier, Joe McCall is your resource if you want wholesaling lease options. Chris Prefontaine, Bigger Pockets writer and speaker, he is your expert on lease option sandwiches, and he's got programs on that and all kinds of amazing stuff. Deandre Lee says, I already just connected with Dmitry Fomachenko. That was quick. Good job, man. Okay, so here you go, Mom Sachs. I'm an RN and I own 2 houses. By the way, I might have missed several other things you posted. I'm sorry. So you've got a house in Arizona, and if sick coronavirus people can't pay rent, is there a government program to compensate the loss? Not yet. Not yet. But that could come. I don't know for sure if it will, but it could. William Shields says, Alvaro Hernandez says, I own a duplex and have about 250,000 in equity. I don't know if I should sell it, refinance, or get a line of credit. I can confidently tell you that because I've been in this situation several times myself, and every time that I've been happy with what I did, I haven't always been happy with what I did. Well, that's a flaw in the system, isn't it?
You should put on Do Not Disturb.
So, anyway, so I'm trying to stay in front of the camera here, and I hope that you guys are getting my answer, but yeah, it's working, and I'm back on. And so I would highly recommend getting a line of credit, keeping that line of credit available for opportunities, okay? And I feel very, very confident that if you get that line of credit while you can, before the bank clamps down on the credit cycle, that you'll be very, very happy. If anybody out there has a lot of home equity, I highly recommend that you that you turn me off right now, and you go call your bank and set up an appointment for first thing Monday morning and get a line of credit and get ready to take advantage of every opportunity that you can. Will there be any? We don't know, but there could be, and it costs virtually nothing to set up a line of credit. My son is 26 years old. He owns about 1,100 acres. He's got lines of credit on every single piece of property that he can get a line of credit on, and I highly, highly recommend that you do the same. And I know Dave Ramsey might not agree, but I don't care. Daniel Martin says, what states do you think are the best for cash flow and equity growth in the next 5 years? The Southern Smile states have been doing really well, and I think they'll continue. Look for places where there is net population migration. Okay, that's places like Texas, Georgia, Arizona, South Carolina, Tennessee. Look for places where there's low tax and lack of government overreach and net population migration. Okay, so I missed several people here, so I'm so sorry. William Shields, rehabbing my first fix and flip, now using my personal money, $200,000. With money so cheap, should I go for traditional financing in the future? I want to do multiple deals at once. William, same answer basically. Get every credit line you can. And I'm not saying use the cash. I'm saying get the credit line open and be ready to use the cash. Think about what Buffett's done. He's a role model for a lot of us. He's got $128 billion in cash ready. Maybe you and I should get 128 million ready. Just kidding, seriously, but seriously, get some cash if you can. Get some availability of cash, all right? And maybe talk to some relatives and say, hey, look, I've been studying on bigger pockets, and I've been reading amazing books like Matt Fairclough's Raising Private Capital for your real estate deals, and I would love to see if you would be interested in partnering with me on some real estate deals. So that would be what I would do. Okay, so I am so far behind on questions now. I'm going to ask you to copy and paste your questions back into the bar, and we'll see if we can get Ben to answer a few by typing out answers while I answer as many as I can in the next 9 minutes. Adoram says Columbus is also growing. Columbus, Ohio. Yes, it is. I used to live in Columbus. Is that where you are? Adoram, I knew I liked you. Ethan says, how can you get lines of credit for investment property though? Is that only for primary? No, you can personally sign and get lines of credit on investment property. Now I want to be clear, go to the smallest bank you can find. And I mean the smallest bank, okay? So have you ever heard of First National Bank of Alta Vista, Virginia? That's where we go. And I don't mean my company, Wellings Capital. I'm talking about my son and his investment properties. And I went with him the first time when he was about 23 and got his first line of credit. And now he's on his own. And but that's my point is, go to the smallest bank or credit union you can. And that is critical for this strategy. To Lee, thank you. To Lee, is LOC the same as HELOC? Yes, line of credit is a home equity line of credit. Yeah. Jay Herod says, under contract for 8-unit property. It's my first property. Do you think I'm biting off too much? Haha, that's great, Jay Herod. Hey, I wrote a book called The Perfect Investment, and I admitted publicly last week that I was probably a little too opinionated, saying that everybody needs to try to jump in at like 70 or 80 units and above. I think that's a lot to ask for a lot of people right now, especially with the fact that since 2016, when I first wrote The Perfect Investment, to now, a lot more corporations have acquired these homes. And so it's really, really hard to get in at that level. 8 is perfect, and I think that's going to be, I hope that's a great investment for you. Be really careful. If you haven't joined Bigger Pockets, Michael Blanc, that's B-L-A-N-K, Michael Blanc has a network of people buying multifamily properties, and they can help you tremendously. If you need a connection to Michael Blanc, just reach out to me or find him on Bigger Pockets. Michael will take good care of you. He's got a program called Deal Maker Live, which is July 16th through 18th in Dallas, Texas. And Michael will teach you to do anything you want to do in the multifamily arena. Zane Callahan says, would you say that over leveraging your first home is not a wise idea? Well, yeah, I wouldn't over leverage anything, but I'm not sure exactly what you mean by that. Are these 1 to 5% down options a good idea? Or does house hacking have the ability to buffer this risk? I put it in my own words, Zane. House hacking will definitely buffer the risk. I think it's kind of risky to get a 95 to 99% loan. I think we found out in several other cycles, especially 2008, that a lot of people got hurt doing that. However, if you're going to house hack, that would be the way I would do it. I still wouldn't do it, but if you're going to do it and you're house hacking, that helps a little. Hashim Jakvani, thank you for joining us. I have been laid off. I have $50,000 to invest in real estate. Where should I invest or state? I have no job. Hashim, it really depends. If you want to do this yourself, if you want to be a full-time real estate investor, look for people to partner with locally maybe, and put your money together and buy, maybe a rental property. I saw one last week for $1.35 million right here in my town. Several people putting in $50,000 would be enough to make the down payment on that. So that's what I would do. If you're an accredited investor and you want to invest passively, there's all kinds of opportunities to do that. You can find some of those on Bigger Pockets. You can find some of those out there at the Real Estate Crowdfunding Review. There's all kinds of opportunities to invest $50,000. Okay, I'm down to 4 minutes, so I'm going to go really fast now, and so I'll probably miss some, so please copy and paste in your questions. Ethan says, I'm in Texas. That's why banks are not helping me. Now, why would that be? I don't know. Okay, small banks for sure is what you want to do. Kevin says, I live in an expensive market with $20,000 saves. I want to begin investing in the market I live in or out of state. Is that enough to start? Kevin, you could definitely do the corporate Airbnb landlord. You could do the corporate Airbnb arbitrage. You could do wholesaling lease options. You could do lease option sandwiches. However, if you don't want to do any of that, go to the Real Estate Crowdfunding Review. That's Ian Ippolito's site, and look for non-accredited options to invest a small amount of money. I've heard, though I've never seen one, I've heard that you can invest as little as $10,000 in some of these. Itachi Jacob says, what type of properties will you not invest in? That's a great question. I would probably avoid retail right now. Did you know 12,000 retail properties, 12,000 retail establishments went out of business, or at least they canceled their lease in the U.S. last year? That was in the best economy in years. 12,000. You all know why. Amazon, etc. JC says, I'll invest with you. Okay, give me a call, JC. Stephanie Burton says, is it possible for banks to decrease lines of credit? Yes, it is. And Stephanie, One way people fight against that is they withdraw the entire line. Let's say I had a $100,000 line of credit. I just pull the whole 100 out and just keep it so they can't clamp down and say, now it's only 20. They can call that line too, okay? So just be really careful as we go into these crazy, tumultuous times. But I think you have less chance of having them decrease it if you have the cash in use in a property, because you can go argue with them and go, look, I've got this in this beautiful duplex. Please don't call this loan. Somebody says, I want a house hack. Siga Lim says, I want a house hack in Virginia, DC, Maryland. Where do you think would be a better place? Ben, what would you say about that? I'm going to read another question or two while Ben answers that, but I think it's a tough question.
Is that Virginia, Maryland, DC?
Yes.
Yeah, I would recommend asking around, like go to the Bigger Pockets forums and ask that question. We're in Central Virginia. My wife's from Northern Virginia. There's a lot going on in Northern Virginia. It's pretty much anywhere in the DMV area, the DC, Maryland, Virginia area is going to be pretty expensive. So
really tough.
I would recommend getting on the forums at Bigger Pockets and asking for some local opinions of people who are already there and doing it.
Yeah. Thank you, Ben. FunTube 1500. That's a fun name. Can I get a HELOC after buying for cash first? Absolutely. You can unlock your equity. Again, go to the smallest bank or credit union you can find. Doram says, we just turned our main house into an Airbnb and are 70% occupied for 3 months. Congrats. We bought a duplex and are moving into one of the units. Man, thumbs up for you. That's awesome. That is a great way to get started in real estate, by the way. Kern Joseph says, you may have addressed this already, but I've got a deal that's not so good, and I don't know if I should buy it. You had some other things in your question there. I would just say don't buy it. Hold out for the best deal. I mean, honestly, buying a marginal, again, go read Howard Marks' book, Mastering the Market Cycle. He says never buy a marginal deal in a high economy. We've been in a very, very high economy for a long time. So Kern, yes, I would wait. I wouldn't buy a marginal deal in any economy. So Jay Diaz says, how do you find these small banks? Just go around your local area. Like we live here in Lynchburg, Virginia, and there's large banks, small banks. I would absolutely get a credit union if you can. Edwin Torres says, what's the name of the crowdfunding again? It's the Real Estate Crowdfunding Review. And by the way, I'm a sponsor. I actually have an investment fund for commercial real estate. I can't get on there. I can't get into the depths of that site and look at it because I'm an actual operator. You can. So if you're watching this and you're not a commercial real estate operator or syndicator, you can actually sign up and go through a vetting process. And if you're accepted, you can actually get onto the Real Estate Crowdfunding Review website and look for all kinds of opportunities. Brian says, what's the best place to hold savings? High yield savings or short-term brokerage accounts? I think all of it is going to be really, really low. It's going to be like you're going to lose money versus inflation. I would say in any. Yeah, Ben's going to add something to that.
Yeah, if you guys just Google Ally Bank, obviously we're not sponsored by Ally Bank, but they're doing 1.5% right now in their money market, and they're offering some kind of bonus. I think they're trying to get customers. It's almost certainly a loss leader for them right now because the U.S. Treasury yield is obviously much lower than 1.5%.
Right. Very good answer. Francisco is wholesaling Bible in a downward market. I should have added wholesaling to my list. If you're a beginner and you've got time and the ability to drive around a lot and learn the basics of wholesaling, absolutely. If you've got a lot of time on your hands, I would absolutely wholesale. Wholesale lease options would be better, though. It's less risk. Ziaz is, I don't know if it's less risk, actually. I shouldn't say that. I retract that, but I think it's a better way to get started. Z Aziz says, is internet only limited to certain types of properties, like properties in MTNL? Is it possible to do interest only on a triple net lease in STNL? I don't know. If you've got a lot of experience, Z, I would say that that's possible, but it's going to be hard to get that type of loan unless you've got a fabulous property at a great price and you've got the experienced team and you've got a very, very large net worth and liquidity. So my clock informs me that the hour is up, and so I'm going to answer one last question. I can't believe I get to do this. I can't believe I get to spend an hour with you all on Friday. You guys are wonderful. Thank you so much. If this has meant anything to you, please give us a thumbs up, a like, or a share. Sorry about the green line across the bottom. Sorry about the fan noise that somebody says is here. I can promise you it's not in this room. It is somewhere, but I don't know where. So, last question. Clever Fox, thanks for joining us. I rent for cheap in Hawaii and save $1,000 a month. Awesome. If I buy and house hack in my market, I can break even and still save $500 a month. Should I keep renting or make the jump to buy? There's a lot of other factors in that, Clever Fox, and I don't honestly know how to answer that simply. I will tell you this, I would rent. In fact, if my wife and kids didn't love living in a house that we owned, I would be renting right now, and I am almost certain the next house I move to, I will be renting. If that tells you anything, and I invest full-time and have in real estate since 2000, almost 20 years, that might help you make your assessment as well. Now, one advantage to owning is you can get that line of credit, but you only want to do that if you're getting a phenomenal deal in a great bottom of the market scenario. Ride it up to the top, and when you get near the top, get that line of credit. Okay, it's been great being with you all. Thank you so much, Zach Gwynn. Thank you, Bigger Pockets. Thank you, Brandon Turner. Thank you, audience. Love you all. Thank you. Have a great weekend. Stay safe. Don't sneeze on anybody, but more important, don't get sneezed on. Thank you. Have a great weekend.